guess we'll just get started here, Tony. Let's get rolling with debt and how people behave with debt and purchasing behavior and so forth.
Yeah, well, talking about this topic, these debt, divorce, and death are the three financial nuclear bombs that go off that change lives forever. Unfortunately, they do. We start off with the first topic being debt. It can be avoided, but it all starts from the beginning. And in the beginning, it's basically companies are trying to sell us something. Someone's always selling something. Hurry up, you're going to miss out on this. Hurry up, you're going to buy this now. It's going to be a deal, whatever. Look at your neighbor. He's living better than you. You should have a bigger house. You should have a bigger car. And it's the fear of missing out on things. That's one part of debt. The other part of debt is the financial institutions that just give you that rope. When you're after high school and you're in college or in university, all the financial institutions are there handing out bank accounts and credit cards because you're a student, blah blah blah, and you're going to need this and you're going to need life. They don't explain how to use it. They just give it to you, and as you use it and you're paying off your debt over time, they give you more just so you can hang yourself. And the financial institutions are basically making money, especially off the credit cards, which you can actually use them in a wise way and actually help you. But the way the banks have set this up, they actually have done studies that if they put the balance owing, what the balance is owing in full, you're going to pay it in full. But instead, they now only put in your minimum payment as a bolded area on your statement compared to the balance, because people will tend to go, oh, that's just a small installment. Yeah, but at 19-20% or higher, that's pretty expensive for you. So not necessarily the best thing to have. And one thing that I've found across all my clients is they have a way to manage their debt, and they live within their means. It might be a horrible thing to say that, but it's basically what we're going to talk about is how to live in current lifestyle while still having something for your future lifestyle. So
yeah, it's sad because I just recently got my credit card statement, and obviously they're not obviously, but they did bump up my limit. They said, hey, call now and increase your limit, which I'm not going to do because I don't need any more credit or access to credit. And then I also noticed on one of the other statements I received, and it bolds out, it says your minimum payment is whatever. And then it says, if you make the minimum payment, it will take you 235 years to pay it off. So you really have to be careful. Like you said, using credit is, it can be a wise thing, but you need to pay those things off in full. I mean, the banks are in the business of renting money, and that's one of the ways they're renting it. And really, it's you're not qualifying. The only thing you need is a job, and you get it. And even in university, you didn't need a job. And I remember getting credit cards first year, and you're just like, really? Do you know who you're giving this to? So anyway, let's move forward. Let's talk about debt and how it can get you to the lead of financial ruin. So James, maybe pull up that slide that we've got.
Yeah, this slide here, it's basically on the left-hand side shows your lifetime capital potential, what you're going to actually earn and what you're actually earning. And if you follow the dotted blue line across, it stops into the red where you pay a little bit of tax along the way. I say little. Some people probably more than little, but people forget about that. And they then spend everything else that they have. You have a job, you're paying your taxes, you can't afford to save it or invest, and you spend the rest. And you can't live at this forever because something will derail it somewhere along the line. And the financial institutions know if they can get you on that financial hamster wheel, you're just going to be working to pay off their debt. They want you to be a spender. They don't want you to be a saver or wealth creator. No matter what they're saying, they make a ton of money off of spenders.
Yeah, I mean, the credit card is the perfect example. And in this case, they're not using credit at the moment. But as I mentioned, there's that derail effect where life throws you the curveball. So let's go to the next slide that actually shows that curveball being thrown at somebody, Tony, and explain how this curveball now becomes essentially a drain on your future earnings.
Well, basically the left-hand side stays the same, other than the red within the lifetime capital potential is basically what you have to pay for future obligations, your minimum statements, your debt that you're trying to finance. And again, you see the money flowing, but you now start seeing the outflow is some of it's actually being addressed to put on to pay off your borrowed funds. Whatever the funds may be, it might be an oh no moment, a transmission on your car went, or a roof went on your house, or whatever may happen. Life throws curveballs, and all of a sudden you're now in a debt, and now you have that money and you have to pay it down, and you're basically living off of what you can. Whatever you can't pay down, you're living off of. So again, you're not saving anything, and it just gets ramped up. This is where the pressure starts. And then you go to the next screen, James. Basically what ends up happening is you have no collateral, and what happens if the debt will always just ramp up higher and higher, and it gets to a point that your debt is so much it's choking off your lifestyle, and all you're doing, especially if you're within a married couple, there's a lot of stresses that come in. And the stress comes in, well, you spent money. You could have spent it individually or together. You spent money and you thought you had the money. Then all of a sudden someone loses a job or something happens. Accidents happen, life happens. We can't control it. Then all of a sudden you're borrowed at the limit, and you can't get anymore. And then what do you do? Well, that's where the stressors come in from the debt and continue on. And we're here to try to help people try to avoid that. There's ways to efficiently take care of this and get yourself off that hamster wheel. And there's many ways and many strategies that we use that a lot of people can't even see, because when you're living the moment, you're just stressed for the next paycheck, for the next bill to be paid, and you feel like you're drowning, and you really have a lot of stress. You throw in the marriage. Hopefully this is not the case for most of people out there, but this is one of the main things that leads to divorce. Financial stress is one of the leading things. In the United States, they actually find that a lot of people that are getting divorced now are in their actual 60s because of everything that's gone on. And then all of a sudden they hit retirement and they have no money. And it's really bad. James, you could throw the next slide up. It'll just accentuate. The debt just gets to that point that it keeps going. You might have a little bit in investments. The red part with investments is the tax obligation that you have on them. You may have a small emergency fund, but when I say small, you have no collateral. So basically you're working to pay the debt off. And if you want to buy that car, you want to buy that house, nice clothes and everything else, you're just paying today out of today's current lifestyle, and you're not going to have anything down the road. Ray, do you want to add more to this?
No, you've done a good job explaining it. I think the only thing that really resonates here is it's the magic of compounding. And we use the magic of compounding with our clients on the other side, whereby we're trying to show them that, save, let it compound. It might start slow, but boy, when that thing starts rolling down the hill like a snowball, it becomes a boulder. And this is the same thing with debt, because if you're only making your minimum payments, guess what? Everything's compounding and at high rates. So you need to be aware of the magic of compounding, and then the destruction that compounding can do to your personal life. And I think this last slide here really points out that, in that lifetime capital potential tank, how much of your future earnings are now assigned to debt maintenance on the right-hand side. That's really just saying you're making money, whatever that number is, but then that red portion is already it's already spoken for. So it's gone. And then you're hoping that something else will bail you out. And unfortunately, or fortunately, housing prices have gone up, but now people are tapping those to spend further. So I think it was a good summary, Tony. I think did you want to add anything else before we move on to death?
No, well, a little bit more on divorce. The divorce, when we're talking about this, James, you can take the slide down. about divorce in general, not the next slide, just take it down, James. And yeah, so basically the with divorce happening, it's very sad that it happens. We don't want to be there. But like I say, a lot of times it's caused by the financial stress. And that if you didn't get into debt, you wouldn't have the arguments and everything else that goes along with it. I have clients that say, we get along, and the only thing we ever argue about is money, and it's always comes back to money, no matter how you split it up. So if you can't, what we have is we actually have a profile, not a profile, but a questionnaire, a client questionnaire that helps you understand your communication. And that communication questionnaire actually helps us to be able to communicate with our clients better. And sometimes we find that you can avoid divorce by being able to communicate, especially if you're having a topic about finance. Knowing how the other person will react and what the likes and don't likes of both sides, it actually helps the conversation better. We found that it's helped a lot of people. Doesn't mean it's going to end a divorce that's going over the edge, and if it's past the point of no return, it's past no return, but we try to help wherever we can. And that is something that we focus on. The other thing with divorce is once it's done, and and there's usually no winners on it. Both sides are there. Whether you guys have debt that you have to split the debt because you have no actual assets to split, that's still an obligation. But sometimes assets are split, and then where do you go? And we can actually help you reestablish yourself and rebuild and give you some advice. All we're doing is basically educating. We're not preaching to anything. And that's the main thing. If you'd like to add a little bit more to that, Ray.
No, aside from the fact that it is very common. I mean, the statistics show that roughly about 50% of all marriages end in divorce. The number one reason is usually either infidelity or finances. Finances tends to lead the road because, like you said, everybody's moving ahead, everything's great, and then all of a sudden, the creditors start calling, and it's like, oh, I thought you had this under control, and no, I thought you had it. So everybody starts doing the blame game, and then it's like, I'm out of here, I'm not going down with you. But then they don't realize that whatever you've accumulated, both on assets and debt, is divisible. It's counted against what they call the net family property. So we're not divorce lawyers by any means. We're not counselors either, but we can get people back on track after the marriage breakdown to help them out. It's just a matter of getting it going. And hopefully, if we meet people young enough and we can avoid the financial side, hopefully it'll work into a marriage long term, but you never know. I mean, things happen, right? So that's really all I had to add. The communication profile is very unique. I know that we're the only ones in Canada doing it. And it's an exercise that people should take advantage of. It's amazing how accurate it is. And it speaks to, are you an auditory learner, in other words, learning by listening, or do you like graphics and pictures? I tend to be both. And then some people like numbers. So it could be a combination of all, but most people like to have a picture. It's easy to digest.